Let's take the view of Sandip Sabharwal as well. He's joining us on the show. Sandip, good morning. You heard our thesis on IndusInd Bank. What's yours?
I think broadly it seems to be in line. So we've seen that the volatility in performance of IndusInd Bank has come down substantially. Now, the key challenge obviously will be for them to maintain their asset quality because that's the important parameter for IndusInd Bank, and that's the reason why it got downgraded in the first place. While at one point of time it was talked of being emulating HDFC Bank, etc., but then it fell because of the NPA issues, etc. And now it's coming back. So I think broadly, it's a decent stock to hold.
Sandeep, there is a reason why you should avoid IT, and there is a reason why you should buy banks. But markets are not really looking at the obvious, which is that for banks there is a lot of visibility, and for IT there is a lot of fog on the windscreen. The price action even on Friday, let's say for IT, despite post set of numbers from Infosys and HCL Tech, was not that scary.
It's not because I think there are too many people who just want to buy IT stocks, and that becomes the risk for the performance of the IT companies also for the future. I think the whole swath of retail investors, they're always looking at buying IT all the time because that's what has worked for them in the past. So I think what's worked for them in the past, they believe that it'll keep on working. I think the picture is quite fuzzy for IT companies, at least in the short run. So now the many I was reading a lot of IT company reports over the weekend. Many analysts are penciling in 12 or 13% earning growth next year and then picking up in 2026. Now, I don't know where those projections come from when the companies themselves don't know what's going to happen after 2 quarters. What's the basis of all these projections? I think IT remains restricted. Financials, I think there's some growing concern among the investors and analysts about the impact of rising interest rates and what it will do to potentially to the asset quality, especially on the unsecured loan side. Now, I personally don't see that as a big challenge. I don't see any indications of that deterioration happening. So I think what I would think is that as results start coming out for many of the banks and people see that there doesn't seem to be a deterioration in asset quality, although NIM squeeze is a given, then we'll see the financials again start to come back.
You got HDFC Bank numbers today, Sandeep, and could it be one of those cases where you buy the rumor and sell the news ka ulta? Nobody's expecting anything from HDFC Bank. They've come out and already indicated that there would be ample liquidity and the return ratios in the near term will remain under pressure. So markets know that the stock is underperforming. But today, if you get something exciting from the number, maybe the trend could reverse.
Yeah, if they give something exciting, it's possible, but I wouldn't bet on it. I think they are facing significant challenges related to refunding the loans for as because of HDFC acquisition, meeting SLR, CRR requirements, etc. Even after they've got priority sector lending leeway from the RBI, I think it's going to be challenging for HDFC Bank in the near term. But and everyone and their uncle are like I would say throat up full of HDFC Bank. So I don't think from the large investor standpoint there's any scope for them to keep on buying HDFC Bank now because all mutual fund portfolios, if you see top holding in all flexi cap, multi cap, large cap funds is HDFC Bank only.
Sandeep, when you say everybody is knee up in HDFC Bank, I would say everybody is drowning in HDFC Bank. Knee up तो कम होता है. ये तो ऊपर से भी हो चुका. I mean, everybody is drowning in HDFC Bank. Where will the new buyer come from? Which is what we have to understand.
Yeah, that's what I said. First I said need up, then I said neck up, but then I think you said head up. So I think
I'm saying drowning.
better.
I'm saying drowning. I mean, I'm yet to find somebody who says I don't want to buy HDFC Bank or I don't hold HDFC Bank. I mean, I've got folks who've been in my friend circle, when I meet people on the street, when I speak to some of the fund managers, there is not even a single bear on HDFC Bank. Kunal, Nuresh, not even a single bear in HDFC Bank. Am I right if I say that?
Yes, very much.
Nuresh, एक bear भी नहीं है HDFC Bank में.
There are no bears. There are no majority of the people are looking at HDFC Bank as a buy purely because for a long period of time the stock was never cheap on price to book or various reasons. But we've seen this happen with a lot of these companies, larger names. So there was a time where Reliance went out for many years sideways. Even in the last 2 years, if you look at it, ever since the fundraising which happened, the stock was 2300. Then today, even if you add the Jio Financial, we are not at 2700. So 2 years returns has not been great. And for the last 2 years, for a long period of time, it was below 2300 mark. So we are getting into that zone for HDFC Bank. Similarly, what has happened with a lot of large caps, wherein you've had a good cycle and then the stock goes sideways for different reasons. So HDFC Bank is the preferred bet among a lot of HNIs. It's the hiding place for people, those who want to have equity exposure but don't want to have a lot of beta.
Sandeep, Jio Financials. Now, it had a good debut. It is now at 220. But at 220, it has a market cap of 1,50,000 crore, and technically, and right now it has no operating business. So, do you think market should take a leap of faith, saying that okay, Jio Financials, it's a Reliance group of company, they will get it right eventually, and this could be a big one from 2 to 3 year time frame?
Well, because we have to look at history and how Reliance has been able to do things. So I think in many businesses they have been able to scale up, but not necessarily profitably. So, and I think that is the challenge. That's one part. Secondly, financials, unlike many of the other businesses where you could get, there could be regulatory issues, there could be entry barriers because of various things. In financials, they are well established, large size financial institutions across the banking and NBFC universe. And some of the fintechs also are reasonably well established and large now. So I think it's not going to be a free run. So in the financial space, for someone to start very small and grow rapidly in the first few years, that's always possible. So once Jio Financial starts growing, the initial run up in growth will be very fast. But a lot of it is already in the price. So I would think that we could see the stock for a long time not do anything. And then if they are actually able to establish a business which is seen sustainable and profitable, then that's the time stock will perform. But I don't think it's going to happen in the near future.
Avenue Supermart. Growth has come back, but where are the margins? Kunal is bullish on the stock because technically the stock in a sense has done quite a bit now. And Kunal, you've been liking the stock for 2 weeks now, right?
Yes, Nikunj, absolutely.
See, I track you so closely. Sandeep, why are you smiling every time on DMart? Every time you have a smile when I say DMart.
You are tracking Kunal because you are owning that.
Sir, I missed the last part. Are you tracking Kunal because?
Because you own the stock.
No, I don't own the stock. As a disclosure, I don't own the stock. But in generally, I'm intrigued with DMart simply because, Sandeep, because here's a company which has a great proposition in terms of growth, management bandwidth, and where it could go. But in terms of the P multiple, every time I look at it, it makes me slightly uncomfortable.
Very expensive stock. And if you if you look at it, the return ratios have been constantly declining over the last few years. So they used to be nearly 22-23% ROE. It's come down to 14% because initially they were very conservative in expanding. So they were just squeezing out growth from the existing properties, which was high ROE. Then they obviously got to know, realized that they cannot squeeze the existing properties any further. Now they are on an aggressive growth path. They'll be investing 2,500 to 3,000 crores every year for setting up new stores, 45, 50 stores every year. And that could further depress margins because growing in existing markets and going into new markets where there might be some other established players and trying to grow there with similar margins is going to be difficult. P/E ratio on current year basis is around 95 to 100, depending on what you assume for earnings. And for next year, around 75 times, even if we assume a 25% earning growth next year. So it's a very, very expensive stock, leaving no scope of appreciation for investors, in my view.
I want to go back to that story. There's a big ET Now exclusive that, unlike what all of us thought, that the exchange timings would be extended in the F&O market, it is unlikely to happen near term soon. It's not been shelved, but the extension is unlikely to come in a hurry. So we don't know the timeline. When I say hurry, it's not going to happen in this financial year per se. That is what we understand. Sandeep, time and again we've gone back to this whole issue of, does India need extended hours? Now there's a global practice where S&P futures and Dow futures, they trade round the clock. But that is for US, and that is a $30 trillion economy. India is a $4 trillion economy and our market size is minuscule of what currently the US have. So while exchanges have the logic in connecting the dots here, do you think we need to be realistic in terms of where we are and what the extension will do for us?
Yeah, and what's the value it will add? Because, if we have read of so many studies done by the regulator themselves and some other large broking houses that 90-95% of the people trading in F&O are actually losing money. I don't know that. Maybe that those statistics are right. Maybe they are not, but I'm not sure. But I think that's been put out. Now, in that situation, why do you want people to trade more at a time? And it will lead to a total. I don't think there'll be huge volumes there. It will lead to a lot of distortions and possibility of manipulation, because 6 to 9, who wants to sit and trade? I think very few people will be doing that in any case. And effectively, there's very little value which will get added. So I think that's a realization which is coming. So although it might not be officially shelved, I would think that it should be something which is effectively shelved.
All right. Meantime, Sandeep, what's the outlook on when it comes to the entire hospitality space? For instance, revenue growth on the back of healthy room rates is what the expectation is. Of course, the Cricket World Cup frenzy has sent prices spiraling through the roof. But within this entire listed space, what is it that gives you comfort? Is it Indian hotels only?
See, across the board, hotels are doing well, and I think the hospitality space is in a very good position, at least for the next 2-3 years more, before we could see potentially capacity additions catching up with demand growth. So, Indian hotels is in a good space. It's been consolidating for some time after a sharp run up, but I think they'll continue to do well. Their strategy of going into new areas and tapping new segments, I think, is a very good one, and it's working well. Lemon Tree also is now in a phase where they could actually start generating free cash flows, and as a business hotel, it's very well positioned. So I would be positive on both of them.
We've also got Jio Financial's numbers out later this week. Is there anything, Sandeep, if you track the company, that you think the street will be closely watching out for?
I don't think they are doing much. So I think it'll all be commentary on what they are going to do. That's what people have to monitor.
Okay. Let's look at specifics of Tata Motors here, Sandeep. I mean, we are talking about Tata Tech here, which now is a benchmark valuation which has been set because of pre-IPO. Anisha was doing numbers in the morning, and there is a similarity in the model of Tata Elxsi and Tata Tech. So do you think the story here is not Tata Motors, but it is Tata Tech? Because after TCS, this would be the first Tata company which actually will go public. And if one really uses Tata Elxsi as a benchmark, then this stock has a long way to go.
Yeah, it's possible. So I'm not if that's the kind of business analysis, because I've not got deeply into that. But then if they are able to get those valuations and then the IPO happens, I'm sure given the pedigree, the performance also will be good in the initial phases. And then as the actual numbers come out, it will follow. So I think that's one part. The second part, obviously, is that Tata Motors as a in its core business itself is doing well, and that's led to the re-rating which we have seen. But what most people don't realize is they see the price movement, they don't see the valuation. So if you look at valuation, the stock is still not expensive. Tata Motors as a stock, I don't think it's still expensive.
What have what has kept you busy, Sandeep? Where have you been shopping? Where have you been? And I'm talking about market shopping here, not where you were shopping in terms of your retail habits. Where have you been shopping?
So I think where I've been adding over the last many weeks has been Voltas and Aditya Birla Retail. So I think those two are subdued stocks. I don't know when they'll start performing, but like what we did with Bharat Forge and Lupin for nearly a year, we kept on accumulating, and then as positive triggers came, those stocks performed. I would think that a similar thing will happen with these two stocks, but it's there for long-term investors. So I don't know what will happen after 10 days, 15 days, but I'm sure over the next 1 or 2 years, these stocks should do well.
Understand. Aditya Birla Fashion, Aditya Birla Retail, in a sense, has diversified too much. Unlike, let's say, a Trend or a Shoppers Stop, they don't have a focused portfolio. So my problem with Aditya Birla Fashion historically, Aditya Birla Retail has been that they are spreading themselves too thin, and in the retail business you cannot do that. Isn't that a valid concern for Aditya Birla Finance or Aditya Birla Retail?
Yeah, it's a valid concern. That's why the stock's down from 360 to 220. So I think there was an expectation post COVID when you listen to the management, etc., that they are focusing on free cash flow generation. They are not going to do random expansions, etc. Then they went ahead and did a few acquisitions which were not liked by the market. So we never bought at that time. But I believe that most of the negatives are in the price now. They have very good brands on the apparel side. And as cotton and input prices remain subdued, inflation comes down. That's the first segment which will see a revival on the retail side, and there are already indications of that. So I think that's the bet. They are a credible player, available relatively cheaper than like nearly 40% down from where they were just a year back, I guess. And uh, all the negatives are in. So as the performance picks up, we'll see performance coming from the stock also.
Okay, Sandeep, on that note, we let you go. Thank you so much for making time and speaking with us. But